Good afternoon, everyone. Thanks for joining our session today on programmable money. It was good that the CEOs who are on the main sort of plenary round table warmed the audience up for us, so I'd like to thank them for that. And now we're actually the main show of the day, because money is going to change significantly as we go forward. I say that because there's a small group of people in the room today, so let's have a bit of fun given we're a small group. I'm Antony Ruddenklau. I'm from KPMG, based in Singapore. I lead our innovation and FinTech practice globally. I also look after our financial services advisory practice down there, working with all sorts of large clients, including the mighty Standard Chartered sitting here in the middle of the room. Just pass over to my colleagues. Maja, do you want to go next?
Oh, sure. My name is Maja Vujinovic, run a small family office and investment firm. I'm a lawyer by trade, former CIO of General Electric, led all their digital innovation globally. I've been in crypto for the last 12 years, invested early in Bitcoin and been one of the thought leaders in the space. I helped co-found Satoshi Roundtable, and we are LPs in many funds in the space and currently work with governments and enterprises, helping them understand blockchain and AI combination.
Thanks, Maja. Magda?
Hi, my name is Magda Wierzycka. I come from South Africa, where I founded and ran a financial services group called Sygnia. We listed on the Johannesburg Stock Exchange. And I also co-founded a venture capital firm in the UK. So we are kind of spanning both the emerging markets and what's happening in the emerging markets in terms of innovation, as well as kind of almost bleeding edge innovation in the UK coming from the academic field. And the claim to fame in terms of involvement in crypto was that as Sygnia, we were 2 days away from launching the first listed Bitcoin ETF. Literally 2 days before the listing was about to happen, Johannesburg Stock Exchange pulled the plug, which I thought was a very sad day for South Africa. We could have gotten a lot of publicity out of it.
Adam?
Thank you. I think Larry Fick needs to maybe pass some of those fees when his gets approved in the BlackRock Bitcoin ETF. But I'm Adam Reeds. I'm the co-founder and CEO of a company called Ledn in the digital asset space. Background is an engineer by training, and got into Bitcoin through its connection with energy. So I was in the renewable power space, developing power projects for about 12 years, and then was having a conversation with a good friend of mine who I went to business school with later on about mining Bitcoin and how Bitcoin was actually storing energy in the place where he was from in Venezuela. So created a company that builds financial products on Bitcoin rails, and now adapting into other assets like Ethereum and stable coins. Companies active in about 130 countries, and proud to be equalizing financial services with the products we're offering.
Thanks, Adam. I just wanted to give some context to the discussion this morning, because this afternoon I think there's a lot of misunderstanding about this space. We'll sort of come and level set in a moment on what we're talking about. But our prediction at KPMG is probably within the next 3 years we're going to see digital assets, wholesale banks, central bank digital currencies, particularly in wholesale, tokenization of financial products become mainstream cross-border. We'll probably see that across a lot of our big trade corridors globally, or at least the capital flows that relate to those trade corridors. And the reason we say that is at the moment, my firm at least is working with at least half a dozen central banks on these projects. We see Bank of International Settlements globally with a number of initiatives. And if you loosely look at the patchwork of corridors and counterparties that they're working with at the moment, we have China through Southeast Asia into the Middle East. That's one corridor, Belt and Road. Secondly, we then have the corridor between Europe and Southeast Asia, that project Mariana that's been announced recently, that's working right now. We thirdly have another corridor, which is US through Singapore into Africa. Let's call that War for Resources, that one there. So that's happening at the moment as well. And then finally, we have a couple of other corridors, particularly North and South America, which are operating. All of those projects that have been sponsored by central banks, commercial banks, and regulators in their own right, to me are a patchwork quilt. So we pull those together and we look at which trade corridors are being focused on globally. We hit the top 15 pretty quickly, and we hit 90% of our global trade through these instruments. And I think part of what Bank of International Settlements is doing is trying to promote and proliferate high quality, stable assets and capabilities for all of the sovereign nations that sit around the world, so that then we have one platform to operate on. But as we go through our session today, I think we'll find there's a lot of barriers and challenges to get there. It's not all kumbaya. There's a lot of hard work and policy that needs to be put into place. A couple of other interesting facts for you. I sit with an organisation which I'm not going to name. It's an industry association, but we work with the 20 GCIFI markets desks around the world for the big banks. They've all been creating infrastructure for quite a few years now to be able to serve at an industrial and institutional level these types of assets. A lot of them publicly say that they're not into whatever you want to call it, cryptocurrencies or digital assets, but the reality is they've been building it and they've been spending lots of money and they are going to participate. And I think part of the message we want to leave today is that it's very easy to talk around these sorts of assets. It's very easy to talk around development of the industry, but what we do need is network effect, and we need enough counterparties to be able to have consistent product, systems, policy, to be able to actually stand up a new way of our money working. That is probably our biggest challenge at the moment in terms of how this works. So today we'll walk through that, and we'll walk through observations from quite a variety of different stakeholders on this panel. We've got some Q&A, but given we're such a small group, just jump up and shout that you don't believe what we're saying or whatever, and we can respond because we are humans. So first, I wanted to start off with just baselining exactly what we're talking about in terms of digital money. So Maja, do you want to give a definition first up?
Okay, definitely, this was not planned, so definitely on the spot right now. I think I will bring the anecdote I had yesterday with the Minister of Investments here in Saudi, and I said to him, I would like to propose a digital asset regulation here, because we're already working with a lot of governments, and I said, you don't have one. And he looked at me and smiled, and he said, correct, we don't have one, because we are scared of that. We don't want to lose money on like FTX. And that's a really good example of what Antony is talking about, because a lot of people equate what programmable money and opportunities there with speculation and gambling and blatant fraud that Celsius and BlockFi and FTX committed, along some really prominent names. And so I think to clear that up, what we're talking about today is an enablement through technology, such as smart contracts and fast databases, and the connection into what is not only going to enable tokenization of real-world assets, such as oil and real estate and mining and et cetera, but also allow creative economy to happen through tokenization of other things that we're seeing in decentralized assets. So I think that's kind of, we do want to clarify that this is not a panel around speculation, although I always remind people that in 1980s, there was no regulation on mining. And you had cowboys who made a lot of money, and therefore you had regulation. 1990s, hedge funds, the same thing. We need to have a bit of that dot-com boom in the internet as well, and today it's digital assets. And by the way, AI as well. I think people are just not finding that out yet. Lots of people have invested in scams that have just put AI next to it and therefore raised enormous amount of money. So I would like to pause there, if that's okay. Or
Yeah, thank you. Adam, do you want to talk around your definition of programmable money?
Sure. So I think, like anything, there's the devils are in the details, and it's really important to work through that. So I think, just to tie it into some specifics and some names that you've heard kind of in common media is CBDCs, so central bank digital issued currencies. I think we'll dig into that. And then a theme right now is tokenization of assets, so tokenization of real-world assets. So that is the idea of maybe the simplest form of that is tokenizing treasury bonds. And then the third would be stablecoins. So this is specifically money, and then there's a whole bunch of cryptocurrencies and other types of ways to tokenize other things. But I think we'll keep it at those three and then kind of go into the details of those.
Do you want to jump in, Magda, before we finish?
I think, the only thing that I would add in terms of, the way I look at the world, which I always think is shades of gray, this concept started with cryptocurrencies and speculation, but it has subsequently progressed in terms of thought leadership into how can we use some of the technology, some not all, but some of the ideas that originated in the crypto space in a space which is a lot more usable to an average consumer, which is basically money. And in that space already, and very quickly, we are seeing this evolution from stable coins, which are becoming a lot more stable, to tokenized deposits, to central bank digitized currencies. So effectively, we are moving at pace. So it's interesting that the Bitcoin adoption of Bitcoin and cryptos, as they emerge, there are 3,000 different cryptocurrencies in existence. How quickly, that took a while, and now this movement into something that becomes a tradable medium of exchange, an acceptable medium of exchange, programmable money, is actually accelerating in pace and adoption. And there are already 11 countries in the world that currently use centralized bank digital currencies. Jet lag. Already, as it stands at the moment, 98% of central banks are researching and running pilot projects in how to deploy that and what effect that would have on monetary policy. So I think this is the space that we can't ignore, because really this is where money is moving, or the way we understand money. That's where we're going.
Thank you. So just leave you with one key message. I think learning points the last few years is, unless we have a real asset that underpins the digital money, it's a waste of time. It's Star Trek or it's fraud, one of the two. And so a lot of the work at the moment with the central banks around the world is to be able to put policy and regulation rules around what type of assets, how liquid are they, and how would they support a currency going forward. So central bank digital currencies, obviously sovereign issued, fine. Tokenized assets, generally supported by high quality treasury bonds or other types of assets that you can trade quickly. Stable coins issued by private companies that must have liquidity, JP Coin being a good example. If we move on to use cases, I know, Maja, you were talking about way back when you were younger, you worked on kind of one of the first use cases, which was invoice finance. Can you just talk a little bit around how you see the market evolving and actually how these assets are used to create value?
Yeah, I think it's an important question, particularly what you mentioned. I'm against CBDCs publicly. I've given that conversation. I'm getting some thumbs up. That's very good. Publicly, I've spoken around very prominent meetings where I'm against that. It is a surveillance state, full on. If we use CBDCs, it adds zero value to what we actually have today. You have digital dollar, almost digital euro. This is all digital. We're traceable to begin with. And I think what Antony's referring to is in early 2000s, I lived in Africa and Latin America, where I was acquiring large assets and doing mobile payments, and I got into Bitcoin then. I was hired by GE to help them really in digital transformation, but I brought a concept of smart contracts and Bitcoin, and not to say, hey, you should just put our treasuries into Bitcoin and wait for it to grow, but in a sense to say, look, this is something where young population is moving into. People are wanting speed. They do not trust the current banking system. There is mistrust, as we know. And people want transparency in many ways and want to have privacy. So you have a world that, 3 of us or 4 of us live in, where one side is decentralized, DeFi, what's called DeFi, and it's a growing population around the world. And another side is the kind of the centralized finance, CeFi, and everything that goes in that's been created with blockchain. So at GE, I got a rejection immediately from the CEO and the rest, who's running around here somewhere. And then after a couple of months, I've been called back in to say, okay, wait, tell us again, what does this do? And then when I combine as we're going to discuss later, smart contracts and machine learning, and I showed them that it actually has a capability that when you attach those two on devices on the edge, you're going to have very fast payments, fast capabilities, data collection at the edge, when I related it to their EBITDA, then they said, okay, wait a second, this is what we need to be doing and thinking about. So first trade finance deal in the world was done between JP Morgan and GE at the time. And so I think this is what you're referring to, and this is where we started learning. But that was to your point earlier to me, what you said, Antony, is that was where we had to begin in order for employees to learn where the capabilities and possibilities could be. Because we couldn't work kind of at this higher level, we had to really bring it down and say, okay, this is how it's going to affect your jobs, and this is how it's going to affect your future, essentially. And so even though I don't promote, and I'm against very clearly CBDCs, and even blockchain to some extent, because blockchain does have, it's a double-edged sword, I am pro people investing in Bitcoin and Ethereum, because we do know that is the future.
Why are you against central bank digital currencies? It's a bleeding obvious thing to do.
It's full surveillance. I think it's surveillance capitalism, and it doesn't add anything.
But we're all surveilled anyway, right? So
Yeah, not really.
He's being surveilled right now on his laptop. I bet he is. So I mean, I know you've raised privacy, and Adam, you talked around privacy as well. You have an issue with that, but I just wonder, is this just a perception or reality?
Well, I think, something else just to think about with the structure of CBDCs. So I live in Cayman now, but I'm Canadian, and so on the CEO panel this morning, there was a discussion about just how long it's going to take interest rates to roll over. And so when I think about the reason that we use the banking system today, it's almost all payments related, right? And so that's the reason a retail consumer opens a bank account so they can pay someone easily. And then when you think about what a CBDC could do, and again, I share Maja's view, I am very, very concerned about the privacy aspects of it, is in theory it can disintermediate the bank. That's the idea to allow a peer-to-peer transfer, frictionless, ideally approaching zero cost, to be able to send from my self-sovereign wallet to another person's self-sovereign wallet. Again, put the fact that the state may have an ability to control those, but again, removing that. And so when you do that, then you remove the need for a deposit base. And if you're doing that, what does this do to the float that forms our mortgage systems and all of the capital flows? So it's an interesting idea in theory, but it's incredibly disruptive into what we have today, and it's impossible to roll over overnight. So I think just thinking through all the downstream impacts of that, the incentives and what would change as people want to hold their form of money in different ways is massive to deconstruct.
Well, maybe I can take an opposite point of view, because I'm actually very much for regulation and transparency. And again, maybe it's coming from a country like South Africa, which has just been grey-listed. I do believe that the role of government oversight in the flow of money is essential. Unfortunately, there are too many bad players in this world that will utilize any kind of anonymity that one can achieve through transactions. And we're not even talking about Bitcoins, because there you've got all the volatility inherent with it. But any other form of encryption and privacy, where those of us that are sitting in this room and pay our taxes, hopefully, don't necessarily have an issue. There are many people that don't. So I do believe in regulation, by the way. I do believe in oversight. But at the same time, I believe that what we should be heading towards is, again, looking at global population and demographics. And that is, we should be heading towards a world in which people who today are unbankable, or particularly in the emerging markets, have the ability to access financial products, financial markets, easy, efficient, costless, frictionless ability to transact. And again, South Africa, but again, emerging markets, we're living in an environment and space where remittance payments are a big feature of the economy. So South Africa attracts huge amount of inflows of people from rest of Southern Africa, and the families all around then rely on remittance payments. Now, people who come and work illegally have no access and ability to transfer money to the families. So, the wonderful networks of tunnels and cash, and that takes place in order to feed families in other countries. And I think, in that space, accessible stable coins, backed by fiat currencies, by the way, I think would be invaluable. On the other hand, having been a big proponent of Bitcoin, and as I said, I tried to launch the first Bitcoin ETF in the world, we would have been 2 days. I was 2 days away from that publicity. I have actually completely lost faith in Bitcoin. I think cryptocurrencies are now just a method of speculation. I don't think, and I'm not seeing any huge productive capacity emerging out of Bitcoin. It is, I mean, and never mind the scams that are happening. I actually think those are very valuable because I think a big issue about this space is education. And having, these headlines about FTX, brilliant. Everyone is reading just because it's, kind of exciting and interesting, but through that reading, they're learning, and they're learning about the risks. I think that is a great part of it. But, any instruments which actually, if I look at Bitcoin, has it stood the test of time? No, it hasn't. It was taunted as being the new gold, the safe haven for investing. People have, lost a lot of money, and it's usually not the people who can afford to lose the money that have lost the money on speculation. So maybe I can take a contrarian view to everyone else.
Can I jump in there for just 30 seconds?
Just a take, because we're not going to carry on Bitcoin.
I won't make the panel about Bitcoin, and I know everyone wants to talk about different things, but I think just the thought of having something that is exactly the same everywhere in the world is unbelievable. And that in itself, even if it's a small allocation in any portfolio, it does not exist in gold. Everything else we have is physical and tied to the jurisdiction that it's in. So that's just an interesting thought piece to think about why those that haven't explored it may want to.
Thank you. And if I just chime in from the Asian perspective in Singapore, the two benefits we've seen of CBDC so far. One is for SMEs, particularly cross-border on their working capital positions. They need the liquidity, and the current banking system, particularly with SWIFT, just locks up their cash. It's painful. And then the second one on Project Orchid, which is an Indonesian initiative, has been around actually serving the underserved and giving them purpose-bound money vouchers to be able to do what they need to without the use of a bank account. So I do think there's room for both. But if we move on a little bit to how the community should actually develop this new type of capability, and you mentioned trust, for example, and when I was last in a forum like this was the number one priority for the community. Banks, tech entrepreneurs, regulators, is to restore trust. But what else is needed? Maja, you must have a perspective on what we need to do to make this viable, trusted, workable.
In which sense? What? Is it Bitcoin, or is it, I think to Magda's point and to Adam, I think it's really interesting because Adam brings up a point that is really key. We don't have one currency around the world, right? We don't. There's so much fluctuation. So I think I'll answer a question maybe from a different perspective is remittances are a trillions of dollars business, right? I mean, this is global issue, and I think it's going to become even a bigger issue. One of the stable coins, we've invested in a lot of stable coins. One of the stable coins we have invested is called Reserve. We're partnering them across Latin America with all the remittance platforms. So the moment you send $50 to Western Union to somebody, that person gets $30, right? Because of all the fees and et cetera. Try doing a bank, right? Good luck, right? None of that works. And so the stablecoin has literally been able to keep the stability of the local currency from fluctuating. So the majority of people, unlike us, because we are very privileged, have an ability to keep most of their money in their pocket. That is an insane amount of work, and that is incredible work. So I think, what kind of work, Antony, do we need to do? I don't know what that question goes to, but I think it depends, right? Which part of the market we're trying to address. I think banks, to your point earlier, you bring up a really good point that every single bank till now, because of regulation, has said, no, we don't touch crypto. But reality is that every single one of them has started developing blockchain, learning about blockchain, understanding programmable money, understanding communities, and underserved. Because what is happening in these emerging markets? If these banks are not going to do it, there is Stripe, there is Brex, there's multiple other ones that are going to take this, right? And they're going to take that share of the market. And so they have a competition, right? And they can't move as fast as the others can move. So look, blockchain does provide full-on ability to trust the other party without ever meeting them. We don't necessarily have that right now for majority of the world unless you're dealing right directly with the bank where you know, okay, my money's with the bank, therefore it's safe, and you go home sleeping safe that that's okay. But that's only certain parts of the world, not everywhere, and not for majority of the population.
Can I pick up on a couple of things then? So I hear you on that. Education, Adam, we talked about this earlier on, and certainly for my regulator, the Monetary Authority of Singapore, #1 priority. People just don't know about these products, how to use them. And I'm talking not just in a retail context, in a commercial context as well. So what's your perspective?
Yeah, so we actually call our marketing team our educator team, and so that's exactly the business that we're in when we're trying to explain the products that we're building. So we happen to be in developed economies. We launched the business from Canada, but one of our largest markets is Colombia, and financial education is a big deal. Often what's exciting is that we provided the first loan to many people in the region, and they're excited. I mean, the empowerment, and when someone can access this and get approval is amazing, but you have to make sure that they know what they've signed up for and they understand the interest rates, all the different terminology that they may have not been exposed to before. So huge piece to make sure that that's done. And I think, again, just kind of coming from an unregulated environment, moving into one, when we started the business, it's kind of like there's what you have to and there's what you should do. Well, if you start just doing what you should do, that what you have to do is kind of easier later on. And that's where we're in the business now of trying to educate the regulators who will be examining us as well as the general public to make sure we can get adoption.
Thank you. And Magda, you were speaking on our preparations around terrorist financing, AML, all that sort of fin crime type stuff. But for regulatory clarity around this space or this whole continuum, what's your perspectives?
Well, one is that regulation is already trying to play catch up. If you look at what has happened with the crypto world, there is already a parallel financial services industry that exists, that has been built around, be it stable coins or cryptocurrencies. You can borrow, you can lend, you can short, you can go long. Literally, there is a parallel industry, and the regulators are only now coming to grips with the fact that they've missed the boat. If you actually, as I said, 23,000 different cryptocurrencies, 200 different stable coins in existence, and some spectacular failures because of lack of oversight. So regulation is absolutely essential, and we've seen some good, because my view on regulation is that given the space and the global reach of the space, you will always have regulatory arbitrage. So people and firms will always find their ways around doing things. So what can you regulate as a regulator? Clearly, within your country, you can regulate the financial services industry and the institutions which play in that space. What you can do, and that goes some way, but what you can do, which is often very effective, is regulate the investor. So, for instance, in South Africa, FSCA and Reserve Bank introduced rules of play, never mind, kind of your KYC requirements, but there are taxation rules. Cryptocurrencies in particular, and to include your stablecoins, are classified as a financial product with particular risk and return characteristics. So just in terms of, what you can invest and your financial advisors can advise you on, there is already a framework within which you are being almost educated by virtue of what you can invest in. And the other thing, which I think is, again, financial services industry, I've been asset manager for about 30 years. The other effective way is to regulate the individuals behind the financial services firms. So again, UK FCA, South Africa FSCA, we all have to, in our personal capacity, be regulated to either manage crypto or to provide advice, or in fact pass on any information about this digital world. And I think that's where regulators should go, and again, they usually, UK, you sort of, I talked to the countries I'm familiar with in terms of regulatory regimes, but in each one of these countries, we are given very specific rights to manage or advise on talk or market based on our experience or exams that we've written. And I think, that the same needs to now happen in the crypto space. Or stable coins. I mean, it all is, shades of gray. But, before one starts talking about it and pretend to talk about it knowledgeably to investors, you need to make sure that you're educated yourself, and then regulators need to make sure that you are educated and have the right to talk.
Thank you, thank you. But I move on, I know time's coming up against us, but one of the perennial issues we always face is the right balance of innovation versus stability and security for the financial system. Maja, I'm going to drop this one on you, but very slowly to give you time to think. Obviously, there are a number of ways of doing that, particularly understanding the products that we're dealing with and trying to make sure that we're clear on what they are. And then secondly, the licensing regime and supervision itself. What are your perspectives on how to make sure that we introduce a new form of digital money in a safe way so that when it actually proliferates and becomes systemic, we're not opening ourselves up to other types of risks that we haven't thought about?
I think there's a lot in that thoughtful question. I think we've heard earlier Jamie Dimon say we're living in a really complex world. I wrote a lot about this years ago when I ran a political election in Mali, and we are in what I call a schizophrenic world. There is no more you think you're running a safe, centralized system, but yet you're prone to more cybersecurity attacks than ever before. You think that your banking system that we've had is, yes, sure, of course it works. Of course it works. And anybody says that it doesn't is crazy. However, it is completely failing the majority of people in the world. And we have this massive gap of wealth that has been created and discrepancy in wealth. And so I think when I came into this because I was working in mobile payments in Africa. And I thought, wait a second, when I read, and I would urge anybody, how many of you have read Bitcoin white paper? Okay, that's a great amount of people. So there's in there, it says peer-to-peer, right? That's what got me. I didn't understand anything else, and I might not buy into the prospect, but what I understood from there is peer-to-peer, because it was so difficult to do everything else in Africa that I said, wait a second, if this is possible, then this will change the world. And so yes, the amount of times I went in front of Congress, CEOs of some of the banks here, asset managers, I've gone in front of them in 15, 16, 17, talking about this. I was seen as somebody who wants to disrupt the system. But there's no way to disrupt the system. There will always be a DeFi, there will be CeFi, there will be regulation. It's normal. And the regulators, I would disagree, did not miss it. They're waiting, right? They're waiting to see where people are going to go make money, and they're going to go tax them. They're waiting to see who's going to, create the best technology, and they're going to go work with them to incorporate it into current systems. So I think the question maybe begs a further question, which is to say, what exactly do you want to create in a country? And I think here in Middle East, there is an opportunity, because there are not many legacy systems, is to create a new system that incorporates the financially disadvantaged people, right, that are not part of the banking, because we know that banks have not necessarily seen an advantage of banking the less advantaged, right? And so I think there's a huge opportunity to really kind of broaden that and live in a better world, right? I do want to stay positive. I do think that's a big challenge, but I do think that this is part of the reason why we're working in Middle East, is because there is that opportunity. It's part of the reason there are opportunities in Asia and other places, where in Europe and in America, it is much harder to do, because those systems are extremely embedded, and it's hard to nudge that.
Thank you. And Adam, I know you've got a view from Canada, right? You want to talk around how to balance innovation with stability?
Yeah, they just, as Maja was speaking, it just had me thinking about something else that I'll just mention briefly. So I think, in the tech boom in late 90s, early 2000s, let's think about what we're disrupting, right? We're disrupting. Walmart became Amazon, and we're disrupting how people shop and retail, right? Obviously, there's many different examples of digitization. Now there's a different tool, blockchain, the technology behind Bitcoin, that's now proliferated into many different things, but it's disrupting banking, and the biggest market in the world is money. So it's just a lot scarier, right? And I think that's the piece that's getting in the way of that. The idea of regulating whether someone went to a store or bought something online is not as scary as how they send money across the world, and it impacts a lot more things. And because of that, what's happening right now is we have a framework of regulation. And as much as we want to talk about banking the unbanked, as you go to sign up with a banking service and try to enable that, most of the countries that you have to check off are the countries that probably need banking services the most, right? And sanctioned countries aside that are, have really difficult things going on. But like I'm talking about Mexico. Mexico is a medium to high risk country for most banking institutions in developed economies. So that's the challenges. Is we're trying to innovate and bring things in, but there's a patchwork of how you're regulated across different countries.
Thank you. Can I just one thing I just want to throw in from our perspective. I know we talk a lot around retail cases. Actually, from KPMG, the biggest opportunity is in wholesale, for sure. Interbank liquidity, it's not atomic, right? It doesn't settle quickly. So that's one of our biggest opportunities, and that's where massive capital flows run every day between the banks, and there's huge inefficiency. Trade finance, that's another area which is, the land that time forgot, but is quickly digitizing. If the central bank digital currencies or stable coins, I think can really create efficiency on those big supply chain capabilities. And certainly look at the likes of Standard Chartered recently. Been running a project that's publicly available where they've been tokenizing their trade assets. They have 60 billion that they're putting out into the market and creating new forms of liquidity there, and actually improving the end-to-end supply chain efficiency as well. So yes, I agree with serving poor people in the Philippines or Indonesia, although you can do that through a mobile phone already. But I think the bigger opportunity, the bigger problems we have to solve are actually in the wholesale banking environment right now. And that starts with central banks and the way they issue money. What is a central bank and how it works? And also how we run liquidity across all of our systems. So the work we do at the moment on platforms with the likes of JP or whatever, we look at liquidity and asset liability management within an FI. We look at it through the central bank lens, and then we look at it back out to the supply chain. And I think that is where the biggest issue is right now and the biggest opportunity for us to save cash. Then we can pass it on to investors or often to the retail space or whatever. So we go to the final part, which is the Star Trek moment where we look to the future, because I know, Maja, you're hugely passionate about what can be, what it should be. Because I think all of us want to improve things, and when we all, we leave our jobs, we feel like we've delivered purpose to our economy. So what are you most excited about in this space? What's going to be the things that you think will be truly transcendent beyond what we've spoken about already?
Yeah, I think I'm always excited about what's to be because I'm positive always. I try to be, but I think the exciting part is tokenization for me. Stablecoins, I see the real use case. It is billions of dollars right now. It is growing massively. I think probably my panelists will have numbers. I don't remember, but it's still a small drop in traditional finance, but it's an opportunity to see. And I say, look, the way I see this is everybody likes to put this conversation kind of in this, likes to label it as, crypto and maybe who knows what's going on and new regulation, maybe there's all kinds of things. Reality is, look, when people tell you, oh, it's used by, bad people, so is money, okay? It's used by these, so is money. I think this is just a part to learn. This is an incredible opportunity to learn. If you are working in asset management or in government or in banks, it's an incredible time to fetch some really smart people. Some of the smartest people I know are working in combination of AI and crypto at the moment and are innovating. So I would say stablecoins and tokenization of assets. I think for me, DeFi is really interesting. I think Magda or Adam brought up the point on, this is a parallel world at the moment. So my brain sometimes has to work in two fronts. One, go to basics, and second, I'm doing all kinds of complex stuff on DeFi. So I like DeFi because it's really nerdy and it's quite cool. And I know that in NEOM, they were asking me questions about things like this because it enables creative economy too, right? It enables people to get paid around that. So I think those three things are really interesting.
Okay, doke. Magda?
If I look at that space, I think what excites me or interests me the most is, again, emerging market head on, is the fact that you can make payments and transfer of money seamless and costless, and for all intents and purposes, for all the bankers that I know, eliminate banking as we know it, and eliminate the super profits and the transaction costs and the spreads on foreign exchange conversions. I think, if we can move to this world, and that's a world where it's a world of inclusivity rather than exclusivity, then, we are heading for a much brighter future. And the other thing that excites me while at the same time, scaring me is, clearly the developments and then the intersection between your crypto, stablecoins, money, programmable money, and AI. Given that AI, as it stands, your large language models, they don't think. They've got no ethics. They've got no creativity. They can spew out rubbish. And yet they are perceived to be, so powerful because, it's not in what you get on the screen and whether that's correct or not. It's whether you believe that what you are being told by a chatbot driven by AI is true. So it's got nothing to do with reality and all with perception. So we are at this inflection point where you can already go on to never mind chat GPTs. I mean, Sygnia, we're releasing an AI-driven chat. And as much as we are trying to control the data set that we are training it on, ask it a question of, I'm 50 years old, medium risk appetite, I want to invest. There's absolutely nothing that, and we're trying to train this thing. Nothing that stops it from saying, buy crypto, 100% of your investments should be in Bitcoin. And then if you combine that with instant ability to implement that advice, then you're in a very scary territory. So what excites me is how that field, given we are at the beginning of this, how that actually develops in order to provide those protection mechanisms. Because right now I'm kind of petrified, but at the same time perhaps excited over what I don't yet know.
Thank you. Adam?
Yeah, just to close out, I'm really excited about the equalization that this technology that can provide. We issue our loans at the same terms and interest rates in every single country we operate in, and that's pretty cool. You can't do that in the traditional financial sector, and it's because the asset that we're providing it on and the technology is the same everywhere. So it just makes sense, and that fairness is something that I'm really proud of, and I'd like to see more and more of that across the road, happen across the world and broader financial services. So I think if we get that right, regulatory clarity happens across jurisdiction, the technology is already there, that's really all we need.
Thank you. And a couple of points from me before we then go over to questions. For me, I'm excited about just getting boring old banking and traditional financial services onto the platform, and it is happening. And I think they have the network already. They are actually the platform. It's the opportunity to combine both and have entrepreneurs like this on the panel with those legacy firms, I think is going to create real value and deploy our capital more effectively. But if you look, there's a stream here running at the moment on nature-based solutions and ESG. And I think one of the most exciting things for us in Asia, before Singapore disappears underwater with climate change, is the ability for the blockchain entrepreneurs to create physical assets and tokenize those. So I'm talking around foreshores, I'm talking around mangroves, I'm talking around traditional forests sitting in Borneo, which are quickly disappearing. But actually, the entrepreneurs can make those really viable capital assets that we can then put on exchanges and exchange and actually protect the planet. So I think that's a really nice thing for the financial services industry to be able to get behind adaptation finance. So that's the area that I think is really going to prove out in the next few years. I'm worried. I come from New Zealand. We're the most flood risk country in the world now. So if you run an insurance company there, you're paying out all the time for excess water. It worries me. So open up to questions in the room for the panel. Who wants to go first? Right, here you go. Yeah.
It could be simple to be a tricky question because I've been trying to figure out, and I've done some stuff in blockchain, so he knows a little bit about it. So how do you actually define programmable money? I mean, don't tell me just smart contracts. I'm just curious. How do you actually define programmable money?
I can just say, I just break down everything in computer science to if-then, right? You can create an event that says, if this happens, then do this, and no paperwork involved, a transaction can happen automatically. But the challenge that I see in it is oracles, right? And so I like using the analogy of insurance. So to tie it back to the flood, you still need some entity, and typically it's centralized or an individual to say the flood happened or it didn't happen. So the challenge with programmable money is real world events and making sure you have a source of truth for that to occur.
Talking about curing complete instructions.
Yes. Yes, so Project Orchid, which is a consortium of 13 FIs based in Singapore, we have purpose-bound money, which is a version of it, and we can create rules in the stable coin that means you can only spend that cash on certain items. So the things that we've proven already across Indonesia, government vouchers for social security, there's a use case there. Second one is commercial vouchers, so discounts and things that we might want to use for our lifestyle. We can put rules into money so that can be, traded, you can get a discount by presenting the voucher or the coin. I think that's programmable money, but those are retail use cases. The most exciting ones are the use cases for global supply chains, global real estate, global investment banking. That's where there's much more significant flow. And I think that is the opportunity we have as a financial services community right now. Yes, we need to do inclusion, but let's go for the wholesale stuff first.
So I was going to say, I kind of agree with you because you mentioned what would be a programmable container, what you said is a programmable money, and you can have both coexisting.
Yes, yes. Questions from other people? Maja, you want to go?
No, I was going to just piggyback on what you said, which I think is really important. And what Adam actually was saying, that if-then statement, and as a lawyer in me, right? It's if-then statement is really the opportunity to create a trustworthy system, right? And so you can program anything in that contract that you would like to happen. And in supply chains, as we know, right, this is really hard. That's why it was really hard for us to do supply chains. And that's why it was really fascinating when I did the first trade finance deal in the world between JP Morgan and GE on blockchain, because that opened my eyes to this possibility that Antony was talking about. Because you could literally program the rules to say what you need them to say to then be applicable globally throughout the supply chain.
Who's got another question before we finish up?
Maja,
Yeah. The question is that for your stablecoin, you said reserve. How do you deal with government's requirement to know who are the folks using it?
Yeah, so I think this is a big question currently because of the unstable regulation, unequal regulation around the world, what Adam was talking about. We work with the governments a lot. So we provide a lot of education. We work on KYC as well, right? We work with companies that provide KYC. We have to.
Yep. But once your token is out there, you cannot trace them yourself. So
Yeah,
you
of course
probably
we
can
can.
only know who buy the token from you, who redeem token from you. But in
Yes.
between,
But it's on a blockchain, so I can see, absolutely. And so every person that actually uses that stable coin has to go through a KYC.
okay, so the burden is on the wallet manager. Whoever manages those wallets, they should have.
Absolutely, absolutely. For right now, right?
Okay, thank you.
Guys, I'm being given the sign here that we're no longer welcome. 2 minutes? One more question? Yeah, one last question and then we can finish up. Any more from the audience? No? So I encourage you to do two things. If you're really curious about this topic, one is go and look at BIS, Bank International Settlements website. You'll see all the different initiatives running around the world. It just gives you a really quick primer on what's going on. Stablecoins, central bank digital currencies, tokenized assets. That'd be the first thing I would say. And then the second thing I would suggest is grab this lot afterwards because they've got an immense amount of knowledge. But thank you very much for your time. It's been really, really good to have you. Thanks for the faithful. Cheers.
Thank you.